Welcome to The Explainer. Today we're diving into something pretty wild. What happens when Wall Street's serious money collides head-on with the chaos of internet memes? Well, it's all happening on one blockchain, Solana.
And it really all kicked off with this number, $69.5 million. That is how much cash Bitwise's brand new Solana ETF pulled in on its very first day. Now, this isn't just a big, flashy number. It's a signal that the entire game is changing for Solana.
Because what we're really seeing here is the start of a fascinating and maybe even explosive new relationship. You've got the super structured world of institutional finance on one side and the totally chaotic, creative energy of decentralized crypto on the other, and they're starting to feed off each other.
So let's really break down what this ETF moment means, not just for the Solana ecosystem, but for anyone who's actually trading in it.
So yeah, it's official. Solana has joined the big leagues with Bitcoin and Ethereum in the ETF club. But here's the thing, this is not just a copy and paste of what came before. Nope, Solana's ETF has a really unique twist that changes the whole dynamic.
And this is where it gets really interesting. We have to look way beyond just the price tag and those initial investment numbers, because this fund works in a fundamentally different way than the ones that came before it.
See, it's a staking ETF. Okay, so think of it like this. Instead of the fund just buying and holding onto SOL, it actually puts that SOL to work. It stakes it, which is kind of like depositing it into the network to help keep everything running securely. And for doing that, the fund gets paid a yield, which then goes to the investors. It's this incredible direct bridge between Wall Street's structure and DeFi's ability to generate returns.
The difference here is everything. A Bitcoin ETF, it's basically a spectator. It just sits on the sidelines and passively tracks the price. But this Solana Staking ETF, it's an active player on the field. It's not just watching the game, it's actually helping to decide the outcome.
And this has a massive effect. Every single dollar that goes into this ETF means more SOL gets bought up and then staked, which, effectively pulls it out of the liquid supply. This can make the price way more sensitive to any new demand. So institutional money isn't just buying Solana anymore, it's fundamentally changing its core market DNA.
Now, let's talk about how this massive structural shift basically pours jet fuel on Solana's most famous, most chaotic feature, its absolutely wild meme coin culture.
I mean, Solana was already the perfect playground for meme coins, right? It's super fast, the fees are cheap, it was a breeding ground for viral hits like Bonk and Dog with Hat. Now, just imagine what happens when you start pouring institutional capital onto that foundation.
It creates this incredibly powerful feedback loop. Check it out. First, the institutional money comes into the ETF. Then, that SOL gets staked, which tightens the supply and makes the core assets stronger. And once you have that stable foundation, well, the speculative energy that powers meme coins doesn't just grow, it multiplies.
And this quote just hits the nail on the head. It perfectly captures what's going on. This isn't some random coincidence. It's a direct cause and effect relationship. A stronger base layer gives traders the confidence and the capital to take bigger bets on the next crazy viral token.
So this whole new dynamic creates a huge opportunity, for sure, but also a pretty big challenge. All this institutional cash is moving around in ways that you just can't see on a normal price chart, creating these invisible currents that can totally shift the market.
So the million-dollar question for any trader out there is this: how in the world do you spot these massive capital flows before they make their move? How do you get ahead of that wave instead of being wiped out by it?
Well, the problem has a name: information asymmetry. It basically means the big institutions have one set of data, and everybody else, well, we have another. Just staring at a price chart isn't going to tell you that a massive chunk of SOL was just bought by an ETF and is about to be locked up in staking. By the time you see the price move, it's already too late.
The solution? You got to look directly at the blockchain itself. This is the edge you get with on-chain analytics. You can literally see the market source code. You can track the wallets of the big players, watch liquidity move in real time, and even spot new tokens the second they're created. It's about reading the story of the market as it's being written, not after it's been published on a chart. So, what this all adds up to, it's not just another trend. It is the beginning of a completely new way of operating, a new trading regime for the entire Solana ecosystem.
What we're witnessing is the fusion of two totally different universes. You've got the cold, hard, data-driven precision of traditional finance on one side, and the absolute chaos, the narrative-fueled, lightning-fast world of Web3 meme culture on the other.
and Solana is ground zero for this incredible collision.
And that really leaves us with one critical question to think about. As these two worlds keep merging, is the key to successful trading even about watching charts anymore? Or is it about watching the flow of capital itself? In this new era on Solana, success might not be about what you see on the surface, but about how well you can read those deep, invisible currents that are shaping everything from within.